Is Xiaomi still just a smartphone company? Or are we looking at the birth of a technological titan that could rival the likes of Tesla and Apple combined? Today is January 22nd, 2026. Xiaomi stock is currently sitting at $34.84, but our latest research suggests an intrinsic value north of $54. That is a 35% discount on one of the most aggressive human X-car X-home ecosystems on the planet. Before we dive into the data, a quick disclaimer. This video is for educational and informational purposes only and does not constitute financial advice. Investing in the stock market involves risk. Always conduct your own research or consult with a licensed financial advisor before making any investment decisions. If you find this deep dive helpful, do us a huge favor. Hit that like button, subscribe to the channel, and share this video with your fellow investors. It helps the algorithm find more people looking for quality equity research. Let's get into it. The old Xiaomi was Smartphone X AIoT. The new Xiaomi is Human X Car X Home. The core of our investment thesis rests on operating leverage. As their EV production scales, aiming for 550,000 units this year, and high-margin internet services follow that hardware growth, we expect a structural expansion in margins. But the real secret sauce for 2026 to 2030? Physical AI. We're talking self-developed chips and humanoid robots, specifically the Cyber 1 series, which are already projected to reduce labor costs in their smart factories by 22%. Let's talk numbers. Based on our discounted cash flow framework, revenue growth, we're looking at a 3-year CAGR of 18 to 22%. Operating margins, expanding to 11 to 13% by 2028. Our base case intrinsic value sits at H5420. In a bull case, where AI vertical integration hits its stride, we could see HK6150. When you break it down by segment, the smartphone and AIoT core is worth about $31. The EV and mobility segment adds $18.50, and that high-margin internet services layer adds another $4.70. Currently trading at $34.84, the market seems to be ignoring the massive ramp-up in the EV and AI sectors. Technically, the stock is in a corrective phase. It's trading below major moving averages with an RSI of 39.3, meaning bearish momentum is dominant in the short term. However, this creates a perfect value entry zone. Major support, H34.0 to 34.25. This is your 52-week low and a double bottom floor. Resistance. We need to see a daily close above 37.0 on high volume to confirm the downtrend is over. Our verdict? Accumulate. The fair buy range is between $34 and $37. Despite near-term geopolitical noise and supply chain headlines, Xiaomi's ecosystem provides a resilient cash flow floor. The gap between the current price and the intrinsic value is simply too large to ignore for long-term investors. What do you think? Is Xiaomi's EV move a masterstroke or a distraction? Let me know in the comments below. Before you go, make sure to like, subscribe, and share this video. Your support keeps this channel running and helps us bring you more institutional-grade research like this. Thanks for watching, and I'll see you in the next one.